Real estate prices are pretty darn high right now, but are there still opportunities out there to invest? What are investors looking to do? My buddy Ryan Dalzell is here. What's up, buddy?
Hey,
good to see you.
Good to see you.
Real estate agent, developer, investor. You kind of have all the titles here that I want for this particular topic. So, what do you do in a market like this? It's up, 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 up. Yeah. Inventory slimming. What do you have your eyes on? Are there things you're seeing in the market that we should know about?
Gosh, there's a lot going on. Inventory, everybody knows that is a broken record there, but there is a lot going on. It's incredible to me how COVID has affected San Diego in particular. We can get broader on that, but we just continue to see a ton of out-of-area buyers, people moving to San Diego. It's almost more that than it is people moving up or down within San Diego.
Agree.
It's really, really interesting, and different price points. Everybody knows interest rates going up, and it's affecting some segments of the market more than others. But overall, it's as simple as supply and demand.
Let me ask you this: since you do all three, which one would you prefer? What deal would you prefer to have right now? Would you prefer to see a deal that you could develop? Would you prefer to see a home that you could flip, or would you prefer to just get a traditional sale? Let's say a buyer or a seller. Like, which one do you think is the best bet for you, since you have kind of all options available?
We have had a lot of success over the last year or two, in particular with land.
Really?
So if I could get more land, that is number one.
So when you say land, are we talking lots?
Lots.
Okay.
Yeah.
And the empty lots?
Vacant lots.
Vacant lots.
And there's so much going on right now between the SB 9 with subdividing lots, with ADU possibilities. So we have a lot that we're closing on. We had a very, very long escrow, which was great because we've been able to ride some appreciation. But we're going to be building a single family home with an ADU, single level home, I should say. So single level's hot.
Yep.
ADUs, incredibly, especially in Encinitas, where they're starved for affordable housing. So, but I think land is really an opportunity. It is supply and demand. So even on the investment side of things, there's less demand for land than there is for single family homes or flip opportunity. Everybody wants a flip, right? Everybody thinks they can flip a house, but not people are intimidated by land. They're intimidated by the process. And it's not easy.
If they know what it is, yes.
If they know what it is. So, I think that's the most margin, and it gives you the most flexibility.
You feel comfortable then with a development project like that might take a year or two?
Yeah.
Even in the climate
Scarcity.
that we're in?
Scarcity.
Okay.
There's
good to know.
So, yeah, I have a buyer literally yesterday from the Bay Area, and he gave me his plan A and his plan B, and his plan A was land that he could build. His plan B was a property that he could renovate. His wife's a designer. He wanted something that he could make their forever home, moving down. And he's a developer from the Bay Area, which tells you something. And he can sell a $5 million home that he has there, move into something 3.5 here. That's his goal.
That'll be smoking.
And it'll be on par with what he has there.
Did you know San Francisco down last year?
Yeah.
4.2%.
Right in the city.
Isn't that something?
Not surprising.
It's not surprising
Have you visited?
if you've been there and you've seen the disaster that's taking place there. Yeah. But just overall in markets, you look at like San Diego up almost 20% last year. San Francisco down 4.5%. I've been saying this forever. I have no idea why people are paying so much to live in San Francisco. No offense if you're from there or something.
Right.
I'm sure you're a great person. But the reality is San Diego dramatically better on all fronts, in my opinion. Yeah. And eventually, markets tend to figure those things out.
Yep.
It may take time, but eventually, markets do figure things out, and now we're seeing that. It's like there's a funnel pouring people into San Diego, but not just anybody, people with money.
Right.
That's one of the reasons why you're seeing a huge disparity in, people. There's a lot of people exiting San Diego and California in total, but it has done nothing to affect the real estate market.
No, and the high end, I think, we're still seeing that. And I think for years, San Diego had been so undervalued. And
Correct.
I mean, I've been a realtor for 20 years, and there were brokers that kept saying, why is it that San Diego is not getting the attention that LA or San Francisco or Seattle got? And I think it took COVID for a lot of people at the high end to realize, and it's a great excuse. I mean, they can work virtually, work remotely right now. So would you rather have a climate like we're enjoying right now, or be in the Bay Area, which it's not that far away, but it's night and day difference.
Wow,
so
it's like a 10-hour drive,
you've
right?
got
I mean, 10-hour drive north.
right.
So I mean, it's, to me, it's just, it's so obvious.
Yeah.
San Diego's such an obvious bet. But so for development opportunity, I wanted to see how much have you gotten into that whole SB9 thing? Like, have you been just, on your development deals, have you been absolutely uniting out?
No, and honestly, in some of the areas that we focus on, the coastal areas, you still have to battle with the density issues.
Okay.
So, the numbers can make sense to really subdivide, but then you get into the city and you get into the neighbors saying they don't want the density. So there's a couple projects that we've had to pass on because just a little too much of a headache. But I think the real opportunities are taking an existing home, adding an ADU, or subdividing a lot that's big enough, a half-acre lot, and having 2/4 acres, no problem there. But if you're trying to subdivide into 10 units, then the neighbors are going to start hollering at you. So
They're not going to be down.
I mean, so it's a path of least resistance, but at the same time, you've got to look at the numbers and see how they work out. But there's still a lot of opportunities, but you make your money on the buy. So we're super disciplined on that. We're not going to chase values. We're not going to get over leveraged. I think, you've got to be cautious. I think this is an environment with rising interest rates. The cost of capital is getting more. So, and you can't count on 20% a year appreciation. I think I think we still have plenty of appreciation to go, but if it's 5% a year, nothing wrong with that.
It's going to add up. That's the thing, is that appreciation isn't supposed to be like hitting the lotto.
Yeah.
It's supposed to be, something that's consistently, over long periods of time, you can go back and go, oh, okay, we got 3%, 4%, 5%. So if you think about it, 5% a year from here for the next 4 or 5 years, which is totally possible, even with rising interest rates. And by the way, rising interest rates could be something that's temporary. We don't know how long it will last.
Yeah.
But it could last a year and a half. If demand is enough to carry the load through that period, then when rates start to come down, imagine what happens. Imagine what happens if prices go up. Just paint this picture for a second. Prices go up 3 to 5% a year for the next 4 or 5 years, and rates are rising the entire time. Then all of a sudden, rates start coming down. What happens from there? You tell me. Do prices keep going up, or do they go down from there? And so a lot of people who want to crash or who are hoping for a pullback in prices, this really, really sad news is there's a possibility, and it might be a really good possibility, that never happens.
Right.
It's possible. It's possible that never happens.
Yeah, it's where's the inventory going to come from?
That's the big question.
And there are a lot of people, I kind of talk about the squishy middle, where those people that are maybe 900 to $1 million for that typical move up buyer, that maybe they've been in their home, they bought it in the sixes, and now it's up to $1 million, and they're thinking, great, this is an opportunity to move up. Those are the ones that now are doing the math and going, gosh, maybe we just stay put. I mean, we've got a lot of equity, uncertain times. We've got Russia, Ukraine, you've got interest rates, you've got all these different things. So that's where I think, if somebody does test the market, you could see it sitting for a while, and unless they're really motivated, then those fall off the market. But yeah, the high end, I think the COVID phenomenon looked like a temporary one at the beginning, but it is a lasting. And I've talked to attorneys, I've talked to CPAs, Big Five, guys that work for Big Five accounting, and they've said this is a permanent shift in the office setup.
Yep.
And people are working from home. And so I think that's going to continue to attract.
It needed a catalyst.
Yeah.
We had the technology to work remotely, to execute meetings, digitally and all this stuff. It was all there. We had everything we needed. So when COVID happened, all we had to do was just adopt these technologies that existed. We didn't have to invent anything.
Right.
And people found this dramatically more efficient. I was just talking to Molly about this a second ago. We're like, gosh, we got so efficient the last couple of years. Now, thankfully, we're getting a little bit back to normal. People are having meetings face-to-face again, going out for coffees and stuff like that.
Right.
So you're seeing some of that stuff. A little teepee here. So you're getting back to normal. What does that mean? Well, it should mean, I imagine it would mean, that you'll see more buyers actually come and want to enter the marketplace. If people start to feel safe in this, remember, a lot of people have been hiding out. I have a bunch of buyers who got pre-approved before COVID and just kind of went away and said, nope, not doing it. I have this immune deficiency, or my mom does, or whatever, and I'm going to completely stay away from anything that might cause this problem to surface for me. So you have those kinds of buyers. Also, to your point about what's happening with interest rates, I have a gentleman just this morning wanted to sort of reconfigure his pre-approval. It's been a little while. He's originally pre-approved for $900,000 with $50,000 down. Now it's $820,000. So you're starting to see some of that. So he's starting to go, okay, well, prices are higher than when I first got. So there's a big gap that's happening there. And the question is what the impact of that gap is going to be. That's the question that we're going to have to let the market answer for us, because we can't answer that.
Right.
But for a gentleman like him, he has options. He has some cash. He could go and adjust his down payment a little bit and do some things. But for people who don't, you're going from, okay, you were pre-approved for $900 a year ago. Well, $900 doesn't even get you now what it did a year ago, and now your pre-approval is $820.
Right.
So you're looking at two completely different groups of houses a year ago versus today. That can be deflating. However, it also helps push people forward. That's one thing that we're kind of forgetting. Rising rates and the lack of inventory, the extreme competition, it does actually help get a lot of people off and into action.
Motivates.
It does.
Yeah.
So that helps buy demand in the short run. The question is, how long will it last? Will it have a negative impact when all the people who were motivated by it are done with their activity, and you're just having people continually look at, I can afford less, and houses keep going up in value. That sweet spot, that middle range you're talking about there's definitely a lot of people looking in that range. I'm old enough to remember, Ryan, when people would get pre-approved for $600,000, and I could tell them with certainty they'd go buy a single-family detached home. And say, that wasn't that long ago.
That's a condo now.
It wasn't that long ago. It's a condo that you're going to be competing with probably.
Now, and the rentals are, and that's the thing. I have a client that, not that he's trying to time the market, but he knows his income. He's got a work event. They're a company going to go public in the next 6 months, and so he's capturing his equity right now. He's going to rent something. I had to really coach him and make sure you line up that rental first. I promise you, I will sell your $800,000 townhome in a week. But line up that rental, because make sure you get that. Don't get stuck. So I think rental properties are another great investment. It's hard to make the numbers work here.
It is.
We've invested in rental property in Tucson, Arizona 4 years ago. Great time to enter that market, and so that's kind of capturing that affordability, because those people that couldn't afford maybe to stay in San Diego, they're going to markets like Tucson and Phoenix and some of those other markets. So there's a lot of ways of investing in different segments of the market that take advantage of the demographic movement, the people that can't afford Southern California anymore and moving out. There's a way to capture that investment opportunity. Then the high end move in here. We're continuing to develop spec homes, $4 million spec homes, because there's just no inventory for that.
No inventory, tons of demand. Would you say for the average homeowner out there, the average person, let's say, that's watching this, the best investment right now is to look at an ADU on your property? I think you cannot lose on an ADU. The cost, the cities are so desperate for affordable housing. Again, I speak to Encinitas because that's a big part of where we develop, but they have off-the-shelf ADUs, no permit fees, instant approval, which is hard to get with any government agency. But so you can literally off-the-shelf purchase an ADU plan, have your contractor drop it in and rent that out, and it'll pay for itself within a couple of years. Probably will be. Versus the cost to build it versus the value it adds to your property as well. It's about 2x from my understanding on those numbers. So if you spend $100,000 or $150,000, let's say, on your ADU, you're probably adding $300,000 in value to your property. And it's hard to have an immediate, 100% return on your investment in anything.
Right.
And for something like this, a lot of times people have a hard time coming up with the cash. If there's any entrepreneurs out there who want to start a business like aduloans.com, you will crush it. I don't have the time. I have a lot of ideas. I don't have the time for it. But if someone were to do that, you would have so many people, and you could securitize a lot of those loans as second mortgages. I haven't found that lender out there yet. That's the only thing that's keeping 100 people I know from doing an ADU.
I'm going to go back and we'll get that domain secured right now. We'll work on that.
Ryan, appreciate your time, brother.
Thank you.
Good to see you.
Really appreciate it.
Hey, share this video with your friends. Let's help make them smarter than everyone else.